Hello, 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 hello. What's going on, everybody? Welcome now, Stock Trades. How's everybody doing today? All right, ladies and gentlemen, today is a crazy freaking day. Crazy day today. What the hell's going on? Epic crash. God damn. What is going on, everybody? All right, so what's going on, right? All right, so as you can see, oh God, God damn. UnitedHealthcare, the United. The health of the United, the group of Uniteds, the king of the jungle is crashing down, down, down. All right, guys. So, right now, what we're basically seeing is UnitedHealthcare. Dude, I lost my voice. I started screaming. I woke up this day. You know what happened to me? It's like those people putting on the VR headsets. I was like, what timeline is this? I ran and I hit the freaking wall. I was like, God damn, my girl's like, what the hell's wrong with you? I'm like, UnitedHealthcare is going down. What? All right. So, I sound like RFK. How you doing, America? All right. So, RFK. Jesus, guys. This thing's down 17.79%. You know what's funny? Here's UnitedHealthcare with a market cap of about 282 million. And here's Palantir. Palantir has a market cap of 305 billion. Guys. We called Palantir at $6.50. Palantir has a bigger market cap now than UnitedHealthcare. What the hell's going on? God damn. Damn. What? Ooh, all right. But hold on. People are saying, well, Al, it's only down 17%. That's what I'm seeing on the screen. Well, look at 5 days. It's down 21.24%. Al, it's only down 21%. Well, let's look at the 1 month. It's down 46%. Al, shut up. This shit has fallen. God damn, guys, look at this. Whoever tells me that, okay, watch. Whoever tells me this shit ain't crashing, I don't know what you're smoking. Look at this. $625 all the way down. 50%. 50%. Do you understand what a 50% drop is in a UnitedHealthcare stock? God damn. Do you even need that? Do you even understand? Wall Street's bleeding out of every orifice of their bodies. Yes, feel the pain. And then you know what? You know what's funny? There's some YouTubers right now out there. There's some YouTubers. They put on their nerd glasses, right? Hello. UnitedHealthcare is a value stock, and it's dropping significantly. You have to be greedy when others are fearful. You have to be greedy when others are fearful. That's what they're going to say, right? I have this one guy on YouTube talking about, well, their medical cost ratios are going to get better in the future. Bro, you don't know shit about healthcare. You don't know shit about healthcare. I heard their medical costs are only 85%. Bro. They just had earnings. They raised it up to 87.5%. 87.5. And guess what? Guess what they did today? God damn. What did they do today? Yes, the CEO, Andrew Whitty. They should get Andrew Toy. They got the wrong Andrew, right? They got the wrong Andrew. They should have got Mr. Toy, right? He steps down. And guess what? Company suspends. I can't even speak. Company suspends annual forecast. They suspend annual forecast. Are you shitting me? So what do you think is going to happen to the medical cost ratio? It's going to go above 87.5%. Listen, Andrew Whitty, step aside. Now, let me tell you something, though. Let me tell you something. So, hold on. So let me tell you something, okay? I'm a bit worried. Not really. No, I'm not really worried, but I am a bit concerned because this guy here, this guy is a, you know, if you really want to, you know, look at some guy, this guy here, this guy's dangerous. This guy's dangerous. This guy is the guy who's replacing Andrew Whitty. This guy was the former CEO back in 2016 and 2017. This guy knows how to create value, right? But obviously, he should have been advising him this whole time. I'm a bit worried because this guy here, this guy is like, I know this guy. This guy is like this guy. You know, you get what I'm trying to say? Like, if there's anyone who's going to turn this shit around for United, it's going to be this guy, right? And that's what I'm fearful of. So we're going to have to see. But I do know something. This guy is willing to make a deal with Clover Health. Vivek, Andrew, if you're watching, I'm not going to send emails. I'm not going to go ahead and message the UnitedHealthcare investor relations. I'm not saying you should message, right, guys? I don't know. Maybe you guys should message UnitedHealthcare. I don't know. But maybe they should. Maybe they should talk to Clover Health. Because this is becoming very, very dangerous for yeah, this is becoming very dangerous for UnitedHealthcare, right? So yeah, they basically suspend their annual forecast. So first they have to revise guidance, then they revise guidance again, and they're like, "Oh shit, we're just gonna suspend all freaking guidance." And you know what? CEO is gonna step down for personal reasons. God damn. God damn. All right, let me go ahead and let me see the comments because I don't know what the hell's going on. All right, Shant, what's going on? Let's see here. Oh, guys. This, by the way, this video is very important. We have a lot to talk about. So buckle up and get ready. All right. Damn, Shant. Save some of Al for the rest of us. 28 is not a matter of if. It is a matter of when. Right? It sounds like I should put that on a t-shirt, right? Or a coffee mug. Let's see here. Give me Clove at $4, man. What $4? Give me Clove at 30. All right. What $4? What $4? We ain't Poe, right? We want Mo, right? That's what we want. Love the intro. I appreciate you. And they got wrecked, right? Okay, all right. That's good. I didn't read that. Epic crash. We got that. Belize. All right, UNS. Oh, you want to talk about market cap? Hold on. The problem is I deleted. Somebody wants kung fu fighting. Boom, 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 boom. Let me see. Hold on. I'm trying to find an Excel spreadsheet that I made that I accidentally threw away because your boy's a little dum-dum. Let me see. Oh, come on. Oh, guys. I have to remember. Okay. I did this in April. April. Give me a moment. Bum, 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 bum. Oh, man, that's 2017. Hold on. Look at April. All right. Hold on. Let's see. Just trying to figure out this Excel spreadsheet so I could get it for us. Because it looks, it's fine. Whatever. We'll just remodel it. That's fine. We'll just redo it. So check this out. Ready, guys? So what was UnitedHealthcare's is it UNH, right? UNH? Is that what it is? UNH? Let's see. Wow. All right, let's look at UnitedHealthcare's historic market cap, because I'm serious. Before we get started on these shenanigans, here it is. Oh my God. Oh my God. Wow. I just want to play the Halo song. You know what I mean? This is like insane. Holy shit, guys. All right, so check this out. Belize. United Healthcare used to be 561.56 billion. 561.56. Right? So if we go to United right now, it's 282. So 282.54. Holy shit. United Healthcare dropped $279 billion. But remember, guys, United Healthcare, they dropped this much, right? They dropped this much, but it's important to understand this. Other healthcare, like, ELV, potentially Centene, and all of them, CVS, a lot of them also dropped as well. Humana dropped like 30 billion. Like we're talking like $400 billion plus has been evaporated from this market, the Medicare Advantage market. And you would think like, oh, tariffs, we go to healthcare. No. I'm speechless, because if right now this thing basically if 275 billion flows through Clover, just that by itself, the stock would be $558. Like, you can see, like, this is a lot of money. Okay. All right. And then 60 billion just flew out today. Like, holy shit. Okay. Oh, United Healthcare. Jim Cramer. I don't want to hurt anybody. Right. I didn't think I would live to see a day like this. Exactly, right? I didn't think I would live to see a day like this. Well, Master, you're on the winning part of the trade. That's what happens when you do data-driven investing, right? Master, you're gonna live for a long time, man, especially using Clover Assistant. Right. There. Oh, you got it. Yeah, that's insane. That is insane. That is insane. Oh my God. Not a good sign. Let's see here. Potentially, counterpart to the rescue. What's going on, Vincent? What's going on? Yes. So now let's talk about other. So, okay. So Alignment Healthcare dropped today as well. It's like, all these other institutional investors are like, oh shit, if that big guy's dropping, let me get rid of this guy. Freaking Wall Street. I used to tutor a bunch of these people, man. These people are brainless and clueless, right? They don't know crap, these institutional investors, right? So 583, right? So 2.75 billion, right? It's market cap, and you can see it's dropped year to date. Now it's up 21.54%. Humana just can't take a break, man. Humana's like, God damn it, we tried to increase our, we had a good quarter. They don't care. Drop 8.39%. Wait, 9.48%. Does it just keep dropping? Obviously, you're getting some sympathy buys right now, but I mean, this thing's down. If you would have invested in Humana 5 years ago, you would be down more than half your money. Just look at this drop. This is a significant drop, guys. Look at you. Let's go back to United, guys. If you would have invested in United 5 years ago, you would be up 7%. Congratulations. Imagine people that invested in United 5 years ago, right? They're looking at today's stock price. They're like, and it just happened like one day, like just they were up like 100%, and then all of a sudden, just a couple days, now they're up 7%. You see how dangerous this is? God damn. Okay, guys. All right. Oh my God. Okay. Now what about Clove? Well, Clove is starting to rise. Clove today was just down 2%. That's it. And then now it's equilibrizing to only being down 0.51%. So we really didn't move today, right? In fact, if you look at the portfolio didn't really do much today, right? I mean, we're down 6,000, whatever, right? We're still at 1 million, right? Now, I am going to say something though. If we were to go ahead and look at this, we were at 1.4 million in January 2025. Sorry, January 25, 2025, bunch of 25s. I want you to remember that number. I want you to remember that number because we're about to do something. We're about to do something really cool, okay? So we got this now, and we're going to watch a couple videos, and then I'm going to bring up the drawing board and the whiteboard. I'm going to bring on the whiteboard today, guys. We're going to have the whiteboard. We're going to have a whiteboard discussion, okay? But first, let me go ahead and turn off the Bluetooth here. And let me turn on this Bluetooth for the bone conduction. Okay, activating this. Hello. All right, we're good. So, so it's pretty much saying Woody will act as senior advisor to his successor, who served as UnitedHealthcare. Yeah, that's what I was saying. This guy I'm scared of this guy. This guy's been in the industry for more than 10 years. Okay, this guy knows what he's doing. All right. So Woody oversaw a tumultuous last year for the company, which grappled with government investigations, historic cyber attacks, higher than expected medical costs, and torrent of public blowbacks after the murder of the UnitedHealthcare CEO, Brian Thompson. I mean, look at the CNBC. Out of all the faces they show this guy. Does this guy look like he needs a little bit of counterpart health? Does this guy look like he needs the Clover assistant? Right? Just look at this guy. This guy's probably like this guy. You look at his eyeballs, man. He looks like he has blown out pupils. Man, this guy right here, guys, is looking at the avalanche of hell raining on him of literally billions of market caps, literally billions of dollars being flown out. I mean, just look at him. I mean, I pray for you. Don't do anything stupid, dude. Just money. Relax. It's a lot of money though, but it's just money. Okay, don't do anything crazy, man. This is the type of shit people, just go crazy, So, I pray for him. Let's see here. You could have saved $300K on your Clove account with that's come to me in a year and then we'll see where the account is. I don't agree with you, my friend. I don't agree with you. Yeah, I know, literally. Oh, he looks like he needs a spinal adjustment. No, I mean, I would say more of the special adjustment we have on the Discord. I can't say it here because it's a proprietary, but that the one where you go in and where you have to equilibrize the spine, and it's almost like a yoga posture, and you kind of have to you have to really help with the whole thing, right? So, right, you understand what I'm saying? Yeah. What's going on? What's going on? So, the thing is, I'm not a trader. I'm an investor, right? So I bought more, right? Stop losses, I don't do those unless there's something changed with the the fundamentals. But so we have this. Let me just kind of remove this since we talked about all these things here. VIX is down another 3.43%. 5 days is down 28.39%. 1 month, the VIX is down 42%. 6 months, it's up, but year to date, it's just up 1.62%. So we're falling. We're falling. Okay. Let me think. What else do I want to talk about? Oh, let me talk about the S&P 500. So year to date, we're up 0.31%. So that's it. We are basically coming back online. We're going above the 200-day simple moving average on the S&P, and it seems to me the reversal is in. I am less cautiously optimistic to more towards optimistic. What I also wanted to talk about really quickly is, this is historic. We're getting an we're getting an S&P near the $5,900 range, ladies and gentlemen. And it's funny because look at this lady from before. The Dow is down because of United. Look at this lady here. Look at her face. This was 3 months ago. And she said, Stephanie Lynx buys UnitedHealthcare. Do you think she's buying it now at these prices? No, she's buying it at $337. Sorry, $537. What is UnitedHealthcare now? Oh, it's $300. Okay, so she said buy. Damn, she said buy pretty high. She said, what did she say? What price? 537. It's right around here. So God damn, dude, she's down half her money. She's down 43%. Are you seeing this? I mean, if this was her facial reaction, when the stock was down just a couple percentage, what's her facial reaction now? It's funny because these people are supposed to be knowing they know a lot, right? And then you have this guy here, this guy's like, oh, I know the industry really well. And then this was again 3 weeks ago, and he's all acting like they're going to recover and he knows what he's talking about. But what I wanted to do is I want to go ahead and I want to show you this video that was posted 10 hours ago. And this is very funny. I'm going to stop sharing of the screen. After this, we're going to get out the whiteboard. We're going to do some logistic analysis. There's going to be a lot to this video. Lots. Okay. Whoa. Okay. Lots. All right. Sharing the screen. Let's go ahead and play this. Let me know if you hear it.
Breaking news. UnitedHealth says Andrew Whitty stepping down as CEO, saying for personal reasons, board chairman Stephen.
Seriously, personal reasons? He's stepping down because of personal reasons. Get out of here. Personal reasons. Get out of here. What kind of personal reasons, right? Maybe he does need some adjustment or something. He's had a stressful life, right?
Hemsley is taking over as CEO and will remain.
I mean, this guy's literally holding back a smile. CNBC has been, it's funny. And this shows you how disgusting the world is. CNBC has been pushing UnitedHealthcare as a buy. First, they brought, what's his name? The guy who likes to sell stocks and then think about it and buy back in. Whatever his name is, I forgot. He'll be forgotten in history. But all I think of is a clown. I'm just going to call him a clown. I forgot his name, right? So the other clown on CNBC started talking about Humana, right? and then Humana dropped like a rock, right? And then CNBC's producers were like, man, let's get this guy out of here, right? So the guy left. Oh, there it is, B-Rad Cooley. Thank you. Yeah, Mr. Clown there. He left, right? He left. And then they're like, oh, let's not show Humana because this thing's falling. So then they show this lady here, this lady here, the next Warren Buffett right here, right? They show this lady here, the next Warren Buffett of investing, right? She obviously, she's like the Charlie Munger of Mungers, right? And she goes in and she says, I'm going to buy UnitedHealthcare, and then it drops 46%, right? And then now I want you to watch this video, and I just want you to see the look on these people's faces. And Andrew Sorkin, whom I respect, obviously he gave some pushback to Chamath, but if you don't realize, the other day in the All In podcast, he was actually nice to Chamath. And now they're starting to realize that Chamath's thesis is coming true. And I believe Clover's soon going to be back on CNBC, because now Wall Street money is going to come back in and get into Clover. Again, they want your shares, guys. They want your shares. And I'm going to explain to you in this video. It's going to be a damn good video. Okay. So, you remember Jim Cramer? He said, I don't want to hurt anybody. I don't want to hurt anybody. In terms of when someone asked him, I don't like Clover. It's not profitable, but I don't want to hurt anybody. Get out of here right now. Watch. Listen to these people.
Remain chairman. Whitty will stay on as a senior advisor. The company has suspended its 2025 outlook, saying medical expenditures are now expected to be higher than it had anticipated. UnitedHealth says it doesn't expect to return to growth in 2026. I think Whitty's, what do we decide? 60 years old, so it's not.
That's not correct. He still owns 4.99%. If he's under the 5% reporting, he doesn't have to specify legally on the SEC. He's a poker player. I believe he's playing his poker face.
And by the way, the losses you're seeing right now, down 4.5%, are on top of the declines that they were seeing yesterday during the session, because the pharmacy benefit managers are really the ones that took this on the chin yesterday after the president's.
And this lady, Warren Buffett, has a big, crush on her. This lady here talked crap about Clover regarding did the company issue a statement, and they did. Clover regarding the shorting thesis long time ago with Hindenburg. I'm just love to see their faces now, because we're gonna make a shit ton of money, guys. I tell you, right now. Let's see what else they say. This is gonna be funny. Look at Andrew Sorkin.
Executive order came out on the drug pricing because it looks like the pharmacy benefits managers are the ones that he was kind of targeting most heartily.
I could be wrong. Did they say they don't believe that?
Now watch. This is more reactive. This stock price is more reactive. Faster than what they are saying, because what they're saying gets broadcasted and then people trade immediately. Okay. Now watch what Andrew Sorkin does, and he realizes what he's doing, and he looks and he gives a little smirk. Look at UnitedHealthcare. It's $361 at the time. It's 4.69% down. Obviously, we know it dropped lower, but watch when he says something, and watch what he says. What he says is very bad. Watch, listen.
Kind of targeting most heartily.
I could be wrong. Did they say they don't believe that they're going to be profitable? Or
Watch, they said that they don't believe they're going to be profitable. He's misunderstanding that, but he literally said, do they not going to believe they're going to be profitable? And then the stock just dropped like another 2%. It just dropped more. It just went down more. See this? Watch. It's funny now. Look at them. They don't know what they're doing. They're like, what the hell's going on? Listen. I've been talking about this from day one. All right. I've seen this issue from miles away, right? Given that I am in medical school, 10,000 Americans turn 65 every day. You think the UnitedHealthcare system can handle Social Security and Medicare? Get out of here, right? There needs to be a change. Let's go ahead and watch the price and the percentage drop as Andrew Sorkin talks.
I could be wrong. Did they say they don't believe that they're going to be profitable or return to growth? Or they said that they do, They do believe. I
Oh,
believe that,
I believe
that
does
they
expect to return
I
to
do
growth.
believe that
Does
they
expect.
do believe
Okay.
that they're going to
Because
be
it
return to
does.
profitability
Oh,
in
that's does expect.
2026. They're just not providing the guidance. I mean, the
I
sort
see.
of bigger guidance,
Okay, but
or the more minute guidance, maybe the way to say it.
but
See, he's looking at the camera. He's like, "Oh God,
it was a couple weeks.
there it is." You called it years ago. I said it's gonna timber. Like I told you guys, Dr. Michael Burry, The Big Short, my mentor, bet against the housing market in the United States, and he won. Future student Dr. Albert Allen, bet against the whole United States healthcare market. And guess what? We are winning right now. We are winning. And guess what? We are using the data. The data behind me, the premium stock terminal that you can get access for, using the coupon code SAS, get $1,200 off. You get access to all of our data and our research. Our group is going to be a bunch of billionaires. I'll tell you, we're going to make so much money. Well, this video is going to be amazing. There's going to be a lot of information in this video.
A couple weeks ago, remember the Dow was down 800 points because of United
all
Health.
because of
It
United
was
Health.
down like 100 points or something. So they
Right.
they miscalculated on something, and then you had, you know,
Well, and Scott Gottlieb talked to us
If
about
you
just
look-
the idea that
yeah.
the expenditures are going to be much more than they had calculated,
And
for,
I would
which is surprising.
if you look
when
up
you consider how many
United, if you
doctors
look
they
up
have.
United Health CEO, Andrew Whitty doesn't come up. It's all about the poor guy that
Right.
was.
By the way,
Because that was the-
he's saying he's leaving for personal reasons. Think
Right.
about the stress of what the last year must have been like.
Right.
Right.
I mean,
Probably.
yeah,
You know,
like
yeah.
genuine, yeah, on so many scores.
Right. Probably looking around
Right.
a lot before he gets out of a.
Coming up,
United Health Group.
Breaking news: United Health.
Yeah, so I agree. I mean, I'm sure he's probably, I pray for him because he does not look healthy. He does not look healthy. He's like, he's very, because imagine, your coworker just got shot. It's very sad. I don't agree with that, by the way. Let's separate Wall Street and business with life. I'm always preserving of life. Let's separate that, right? I don't agree with the killing, but I'm more, let's just separate that. It's not okay. But what's happening right now to the stock price is okay, right? This is good. The other one, no. Okay. Let's go ahead and let's go ahead and share this. Let's share this screen here. Let's listen to this lady here. She might be the next Warren Buffett too.
Down another 16% today to their lowest level in 4 years as the CEO steps down and the company suspends its forecast. Bertha Coombs joins me now with the latest. And Bertha, they just had this earnings
Oh yeah, Bertha knows Andrew. She's cool. I like Bertha. She's cool. She's all right. I'm down with Bertha.
report that didn't go well. Today's news was not pegged to anything in particular. This just came out of the blue. Is that right?
Well, to a certain extent, some folks say it's not a surprise given just how badly things went during the first quarter. United Health suspending guidance for the year amid a shakeup in leadership. CEO Whitty stepping down abruptly after a tumultuous 6 months that saw the company's first quarter earnings miss expectations, driven by poor performance in Medicare, coming months after the tragic killing of health insurance chief Brian Thompson. Chairman Stephen Hemsley once again taking the reins as CEO. Between 2006 and 2017, he built up the company's Optum services through key acquisitions in pharmacy.
Wait, Belize, I don't follow anyone. You want me to follow somebody? You want me to follow her? Is that what you're telling me? Or are you saying you follow her?
benefits, specialty pharmacy, physician practices, and surgery.
Dr. Patel's in the house. Oh yeah, you came in at the right time. We're going to get the video lectures. We're going to get the whiteboard. This is going to be incredible. The whole thing is going down. It is crashing. UnitedHealthcare is dropping. Holy crap. All right. Oh, you want me to follow her? All right. Hey, you know what? Let's do it. Hold on. Let me see. I'm down with Bertha. Where are you, Bertha? There's people in the industry that I respect, and Bertha's one of them, right? She plays no games. I respect Andrew as well. I like Andrew, right? There's some people that you just respect, Bertha is one of them. Wonderful lady, just very nice lady. All right, Bertha, you're my first follow. Okay? That's it, guys. Al Stock Trades now is following one person, and he's following the one and only Bertha. Go ahead and give her a follow and tag her. Say, come on, Al Stock Trades, right? I'll be very nice to you, Bertha. I'll be very nice, I promise. Okay? Right? You're a very nice lady, right? She's done nothing wrong. She's a good girl. You know, she's very good. She's reported a good woman. My apologies. She's wonderful. Okay.
During the first quarter, UnitedHealth suspending guidance for the year amid a shakeup in leadership. CEO Whitty stepping down abruptly after a tumultuous.
Oh, we already watched that. Right? I like her so much. I want to watch her again. She's a nice lady, man. She's good. I like her. Okay. This guy here. Yeah, I don't. This guy here. I don't know about this guy. This guy, not so much. You know, not so much. So let's exit this. Dow's down. Let me turn this on. Hey, Michelle, lower the AC. Michelle's not here, so I have to do it myself. There's an AC over here, but also, like, I'm just gonna up the fan up a little bit here. All right, we're good. Let me make sure. Okay. Oh, all right. Yeah, you don't know you don't know what you don't have until it's gone. She's not here. I have nobody to help me with the AC. All right, she's the best. She's my AC girl. My AC girl. Anywho, as you can see, since the market right now is above the 200-day for the S&P, you're starting to see bears. Oh, by the way, this is the AAII contrarian indicator. These are retail investors. Obviously, you want to do opposite of what they're doing. If they're bears, like when there's a dip, as you can see here during 2020, you buy. Every time there's a dip, they become scared like chickens and you buy. Now they're starting to retreat, right? So I think now the bears are retreating away, meaning stocks are going to go up. It's just the way it is, right? All right, let me think here. All right, so we got this. Oh, by the way, shout out to Palantir also, my Palantir bulls. We called that stock out at $6.42. Now it's $128.10 with a 52-week high of $130.60. Bank of America and Wedbush, Daniel Ives set a price target of 150, I believe. So there's that, and so there's that. So we got that. What else? We talked about that lady here. Okay. So now we're going to go ahead and do some magic. Okay. I'm going to move some stuff around. One moment. Of course. Ladies and gentlemen, we are moving up in the world. We are moving up in the world. This lady is actually no longer part of Clover. She's part of the stock terminal. No, we're moving up in the world now. Okay, so let's go ahead and hook this up. Go here. We have a lot to talk about. Okay, a lot. I don't know where to put this mic. I don't know. It's too big. I don't know where to put it. Hold on. One moment. I think I got it. I gotta stick it in here. There it is. Okay, so I just went ahead and stuck it in. So, all right, it's the first time I'm doing this, guys. So I'm still trying to figure this out. So iPad. What? Oh, wait. What? Did I get it? I just need to, it just resets. I just need to reset it. Let's open this up here and let's do. All right, we're good. I think we're good. Are we good? I don't know if we are, actually. One moment. I'm still connecting this. Oh, we're good. Hallelujah. Woo! Nice. Very good. Very good. Okay, so how do I do this? Put this here. All right. So now let's just open this up here and let's see. I'm going to go ahead and see if you guys can hear me. If I go ahead and see if I can mush. You can hear me now? Is it okay? I'm sorry. Is it okay now? Is the audio weaker? Lost sound? Is it better now? All right. Because I like to talk to it up close. I like to be like this. But the thing is this okay if I speak like this? Let me see. But the thing is this okay if I speak like this? So you guys can hear me like this. So I don't have to put this thing up to my face. Wow. This is very nice technology. Okay. All right, guys. All right, we good. All right. Ladies and gentlemen, we got the whiteboard. We got the whiteboard here. We got the Apple Pen. Let's see this, okay? I'm going to draw something. I forgot how you know the little S thing? I forgot how to draw. I forgot how to draw it. You guys see this? You see it, right? Is it clear? You guys see that, right? Okay, perfect. Oh, I forgot too. Yeah, I forgot it. I used to draw it all the time. Oh wait, I remember. Like that. Anywho, we got it. All right, so all right, enough fooling around here. So now that we know this is working, all right, ladies and gentlemen. So what I want to do real quick is, if you don't recall, let's make sure we push this here. Like I told you, remember when I said January 25, 2025, we were at 1.4 million, right? Oh yeah, I know. I have to lose my millennial card. Yeah, I know, right? Yeah. I know. You guys, I mean, I'm pushing you guys back. Let's see here. I use this when I go tagging. I know. Yeah, you guys know. Yeah, I know. That's old school. It's clear. Excellent. The 90s kids, baby. Woo! That's what we're talking about. Excellent. Okay. So watch this. I'm going to do some math. Okay. So 1.4 mil, forget the 20,000. And then here was around 500,000. We'll just use these numbers. Okay. And I'm going to do some, math. Okay. Follow me. We're going to do some math. All right. So what I'm trying to do right now is I'm going to use some logarithmic math here, okay? Because there's something called the rule of 72 or the rule of 40. right? We're gonna, and in order to show you that, I need a draw. Okay, so if you go ahead and go to April 15, 2024, from January 2025, right? January, it's around 280 days. So from April 2024, and my handwriting is terrible, so please excuse me, to January, like I haven't written anything in a long time, 2025, on average, that is 280 days. Okay. I need you to remember this. It took 280 days. And what happened in 280 days? What happened to, the Robin Hood account? It essentially, you can hear me, guys, right? Everything's clear. It essentially went ahead and 2.88x. It 2.88x. So we have a certain time frame, and within a year, it 2.88x. Yes, it's clear. Amazing. So why is this important? What are we trying to do here? Okay. So Clover Health is undervalued, right? How undervalued is it? Well, let's explain kind of the reasoning. Is this how you do new page? We are working on studying your material. What the hell is this? This is AI? Okay, got it. How do I stop this? Okay, good. I'm getting old here. All right, so what we're going to do here, guys, is why is this important? Well, in 2017 to 2018, Google bought CLOV at a $1.7 billion evaluation. Okay. And then fast forward, Chamath then in 2020 to 2021 sent Clover public at a $3.7 billion evaluation. So it's very clear that like in the private markets, this was pre-SPAC, right? Pre-IPO, and it was already valued at 1.7 billion. Right? I know exactly. I should have sold and thought about it. Ooh, right? So, 1.7 billion. Okay. So the question now is, well, what's the market cap of Clover? The market cap of Clover now is 1.73 billion. Okay. So you can argue to say the market cap now is in 2025, literally, 2018, 2019, 2020, 2021, 2022, 2023, 2024, 2025. 8 years later, it's the same, right? So if we were to go ahead and graph the stock price, right? And then here's time. The stock price in the beginning was here in terms of its valuation. And then it basically collapsed. And now it's slowly starting to do this. And now the intrinsic value, it started off like this, then it went down. That wasn't supposed to turn. The intrinsic value kind of dropped with it too. And now the intrinsic value is a lot higher. And all of this here that you see, all of this drop So this is your IVC when you calculate. This drop here is called your margin of safety. Okay. And we have a lot of it, right? So we have a lot of margin of safety. Okay. So because now Clover has dropped so much, it needs to get back to the medium, which is what we have our quantum charts calculate. It has to revert back to the median. Okay. And as it basically reverts back to the median, ladies and gentlemen, as it reverts back to the median, you're going to see a big zap up on the price, and it's going to happen now, right? So based off of the zap up and based off of it basically returning back to the median, there is some mathematical calculation to how Clover performed over the year. Okay. So now let's go back up here and let's basically go back to what we're talking about. So it took 280 days to essentially 2.88x your money. Okay. And you have to basically look at that trend, and then we'll recalculate. There's another way, and I find this way pretty interesting. Okay. This is how billionaires kind of do things, like how Palantir is growing. Okay. So to calculate the doubling rate, what you got to do is you have to take the daily growth rate, right? And what you do is you equal it, right? And you take the log of 2.88 divided by 280 days. So where did I get 2.88? I got it from this number. What did I get the 280? Well, I got it from this number. Okay, that's why I spent time on that. And if you were to go ahead and do that and you calculate it, you get 0.459 divided by 280, and you bring it back and you get 0.00164 log base 10. Okay? This will make sense. We'll have to build up the math. Okay? So then now we want to find how long it takes to double. So then now you take the log of 2, which is the double, and that equals 0.301, which then you go in and you take 0.301 and you divide it by 0.00164. Where do we get this number from? This 0.164? We got it from this number here. Okay? And when we do that, we get 183.5 days. So at this current rate, you double your money every 135 days, which is around 6.1 months. Okay. So then now we have to go to use another mathematical formula, which is the one I already did for you that you don't have to do. Okay. So you go to the market sentiment intelligence, you type in Palantir. And when you run the analysis, it's taken 1, 2, 3, 4, 5, 6, 7 quarters. Okay. You go to Clover, and then you run the analysis for Clover, and we're pretty much 2 quarters in. So we have 5 to 6 quarters left. And if we were to isolate that, which we isolated in the video before, it was August 1st, 2026. Okay. So that's when we're going to be at 5, 6 quarters. All right. So now going back here, So now what we do is, if we know now from January 20th, 2025, we had a portfolio of around $1.4 million. Okay. We want to know in August 1st, 2026, we want to know, how many days is that? That's 559 days. Okay. So now what we do is we take this number, the doubling days, we take that number, which is, we take 559 and 183.5 days. And obviously these cancel, right? And essentially you get 3.05 doubles. Right? So then now you have to get the final growth multiplier. So to do that, we have the total multiplier, which is equal to 2 to the power of 3.05, because then this turns into an exponential. Okay? And to do that, you get roughly 8.2x your money. So then from January 20th, 2025 to August 1st, 2026, we should expect $1.4 million times 8.2, $11.48 million in this portfolio. So the next 2 years, whatever, right? We should be around 11.48 million if this ratio of growth stays the same. Okay. So now the question is, well, what's the stock price going to be? So in this, so I have two accounts. I have one larger one with 15 million. That one has only 100,000 shares of Clover. This one has more. So I picked this one to show because, again, it's nice, and other one's mixed with my significant other. This one's nice because it's just, it's easy to isolate with the wheel strategy, and we're going to be making it public. Okay. So with that, let's go ahead and do the math so we can correctly. So this one has around okay. This one has 312,953 shares of CLOV. Okay. Okay. So altogether, about 412,000, but we're just going to use this number. Okay. So now all we have to do is, how do we find now what the stock price is going to be? Well, you just take 11.48 million divided by 312,953. And when we do that, I'll just do it here, so we could just keep it simple. Million divided by, you get $36.68. So you got a $36.68 stock price, utilizing the math that we have right now. If Clover Health goes ahead and sustains that growth rate. Now let's go ahead and take this and let's now say, okay, well, we have $36.68. Now let's go ahead and find the 25% margin of safety, MOS, right? And if we do that, all we have to do now is just multiply by 75%. So $27.51. And you can go margin of safety above, and we can argue, $40 plus. But we're not going to look at here right now. When we get closer, we'll talk. Right? Right? But if we take a margin of safety of 25%, you get around at $27.51. And that's the time frame is after the bonus terms. Exactly. It falls right in line with basically what we're doing. And I had to get the whiteboard to go ahead and talk about this. We're going to have a mechanical whiteboard too. Again, for individuals that want to be part of our lifetime access, this is why it's going to be expensive. You got access to the data, you got access to educational material, and now you got access to essentially this kind of a whiteboard style learning. And we're going to have this with Zoom, and we're going to be talking, and we're going to be discussing, and it'll take you zero to hero. It's just a very effective way of teaching. Okay. 10x market cap in 2 years. They better go sell that ass on the streets. Well, here's the thing. If you just take 36 point, if you take that and divide by 2, that's an $18.34 billion market cap. Which is not that bad, honestly. Al gonna make me buy more during the live and the after hours. I just put in a limit order to buy Clove. They gonna sell that SaaS on the street. Well, that's the thing. That this is what's weird, okay? Because again, for all the individuals, for all my math nerds here, we gonna kind of brought you back to logarithmics here. Look at the math that I did. Okay. I'm honestly serious. What is this here? Let's see. This is apparently create study material. Let's see what it can create out of this. No, it's not enough content, right? I guess it's not smart enough. I don't know. Right. All right. So I appreciate you, Russ. So and this from X, Russ from X. Welcome. So you look at this and follow the math, kind of rewind the video, and you can see kind of how we did this. But if you say this can't happen, well, I mean, look at Palantir, right? Look at this is how doubling works. And we took off 25% margin of safety, and it's still good. So now the argument is, well, can we prove this on an intrinsic value? Well, actually, let's do it. Let's do that. Before we do that, let me do one more thing, and then we're going to get back to the keyboard. But I hope that you like this format. Let me know if you like this format. Oh, and a lot of people on our lifetime access, congratulations. That triple dragon, excellent work. I mean, you guys are finding 5 baggers, 10 baggers. I mean, that's what happens when you empower people with data. You guys are kicking ass. So excellent work. All right. So now let's go ahead and let's share the screen and let's do something here. Okay. So let's say, this is there a way I can make a box? I cannot make boxes here. What the hell is this? Okay. Let's go back. What the hell is this? I don't want this. Okay, that's fine. Whatever, that's fine. Why is this dark? Man, what the hell? Yeah, I knew I shouldn't mess with it. That's me right now with a little face with a magnifying glass. All right, hold on, let me think. All right, that's fine. We'll just open up a new one. I can figure it out. All right. So now let's go ahead and let's do some magic here. Okay, so now let's put a green, and let's say this is Clover Health. Okay, and let's make sure I want to make sure. Okay, good. We're good. All right. So this is Clover Health. Okay. You love the format? Sorry, I'm just getting used to it. So then now, and I just got the iPad today, so that's why it's still new. So that's need some more time. But I had another iPad, but I gave it to my significant other. So she used it for medical school. So now let's draw this little box. Okay. And just for the piece, for all intents and purposes, we're gonna make these boxes kind of big. So how many? Okay, so let's say these boxes represent shares. Okay, so how many do we have? You know, 1, 2, 3, 4, 5, 6, 7. So it's 7 by 1, 2, 3, 4, 5, 6, 7 by 6. So we have about 42 shares. So we have about 42 shares, excellent, of Clover stock. And this is the whole business. The whole business. Okay. So if let's say I own 2 shares, you can say I own 2 out of 42. So I own 4.76% of the company. Right? Does that make sense? You can go ahead and say 1 out of 21, right? But I own about 4.7% of the company. Okay. Own all that, right? So what does a share mean? Right? Well, if you go ahead and take this business, right? And I kind of wish let me see if I can. I'm gambling here. Oh, I gambled correctly. Damn. Okay, let me see if I can get. All right, excellent. Good. Right about here. Okay, good. Let me see here. Okay, I just want to put it there. So then now let's go ahead and let's say, revenue comes into the business. Any money that comes into the business is called revenue. Okay. After you subtract all your expenses, you get from this, you get net income, which is profit. Okay. This profit is flown into the business. Specifically, it flows in every share of the company. It flows in every share of the company, including yours. It flows into every share of the company. Okay. And what ends up happening is you have, three financial statements. You have the balance sheet. You have the income statement, and then you have the statement of cash flows. You have the incomes, you have net income, which then flows in the statement of cash flows, which then adds to free cash flow. So as the net income starts to go up, right, free cash flow also goes up. Specifically, operational cash flow goes up. Okay. So ultimately, as the company gets more profit, you get more earnings, because that again splits amongst all of these 42 shares. So how do you calculate earnings per share? Well, it's simple. You take EPS is equal to net income divided by outstanding shares, which is 42 shares. Right? So let's say in this example, they made $100. You take 100 divided by 42, which is $2.38 per share. That's how much you've earned. Okay? Because and you multiply that by how many shares you have times 2. Get it? That's per share. Okay? So this is important because ultimately, let's kind of put this into perspective. You have 2025, 2026, and 2027. Every year, you're going to have revenue increasing. So let's say revenue goes from 100 here to 125 to 150. And let's say the expenses go from maybe let's say the revenue is 1,000, then 1,250, then 1,500. And let's say now the expenses here are $900. I'm going to put them in red. $900 for the expenses. And then next year, they go up by maybe $925. And then in 2026, they go up to $950. If we were to calculate the net income, this is $100, which is what we got here. right? See how I'm trying to connect this for you guys, right? But then next year, let's say they go up. So now you take, I'm going to just bring the calculator here. You take 1250 minus 925, you get $325 in net income. And then you get 500 minus 950, which is then $550 of net income. So you're starting, by the way, these are all net income. All right. So it's interesting because you're only getting, it's really interesting because, if you look at the difference, you take 1250 minus 1000, divide by 1000, you're getting a 25% increase in revenue. But if you look at the net income, you're getting from here to here, you have revenue going up 25%, but then you have net income going up 225%. Let's see this one. Again, revenue goes, from 500, so 1500. Then you divide that. So let me, so 1500 minus 1250 divided by 50. So here now revenue is going up only 20%. And then now net income, you take 550 minus 325 divided by 325. Net income now is going up 69%. Is that right? Yeah. So how's that possible? How is revenue only going up 20%, but yet net income, and imagine if this still goes up 25%, right? How is it possible though net income is exploding? Well, because expenses are being minimally increasing, SG&A minimally going up. Okay. So it adds to revenue, right? In a way. Does that make sense? Because the overall profits end up going up over time. Okay. So you see how I'm basically taking a, multi-billion-dollar business such as Clover, and I'm breaking it down like they're making $1,000, right? Most people don't know how to do that. I've been doing this for 15 years now, 14, now going on 15. I think it's like 14.3, right? So we're going on this soon to be 15 years. And, this is kind of a simplified way of looking at kind of how to calculate intrinsic value, right? So ultimately, you're starting to see now, and you'll start seeing it with Clover, and I'm going to show you with real Clover numbers what I'm talking about, right? But you could see if they can keep expenses low, but keep revenue high, then ultimately you get to a point where they're going to be a cash cow. Because if it's true the Clover Assistant works, and we know it works, revenue will go up, but they'll be, the Clover Assistant will just be able to maintain them and continue to drop MCR, who knows, even down to 60%, 50%. But it doesn't matter because they end up taking the long run rate of 3 years, right? And then ultimately, they can grow faster to offset that MCR, so they grow an appropriate MCR growth range. And then as you can see that as the revenue goes up with expenses minimally increasing, you start to create a and this is with revenue falling down 5%. I mean, if you were to go ahead and let's recalculate this, and if we were to go ahead and say let me see here. If we were to do that, technically, let me make sure the math is right, so I could do, make sure it's right. Here. Yeah. So if we were to go back here and actually fix the math to make it really 25%. So now let's change this. Let's say we want to do a 25% growth rate. Well, that's simple. We have to just remove this and now remove this and change that to 62.5. And if we were to do that, you take 1562.5 minus 950. That's 6125 of the net income. And then you take 615 minus 325. Now this shoots it to 88.46%. Now what's interesting is Clover, we in this example, we're going from a positive number to another positive number. Clover is going from a negative net income to a positive net income. So that range is going to explode. We're talking over a 100% to 200% gain in net income percent. So ultimately, what is going to happen to free cash flow, right? Now, we could go ahead and do this in real life, but assuming they're already free cash flow positive and they already have some form of free cash flow. The free cash flow is going to increase relative to this insane percentage. So what does that mean? As the business gets more. So as the business makes more net income, their free cash flow goes up, right? And at the end of the day, when you have, free cash flow, hold on. If you have free cash flow, what can that be used for? Well, that can go back to cash reserves. That can be, do buybacks. But ultimately, it's going to increase the value of the business. It's going to increase the value of the business. So going back to our example now, as you can see, yes, it's true if the revenue is going up linearly 25%, the net income, which we'll say is green, is actually growing. It has almost like a decaying, but it's kind of interesting. How would you describe? Yeah, the net income is like this. Right? In same as the free cash flow, right? And how do I know this? Well, slope is equal to rise over run. And if you take, the slope here, it's a lot higher than here, right? But we're assuming that the growth rate is going to stay the same at 25%. What happens if the growth rate goes and then starts shifting up? What ends up happening? What ends up happening if the growth rate now, let's say, starts growing 35%? Then you start seeing another spur of free cash flow and net income, but it grows even more exponentially. Okay. So what can we do as business folks and let's say, here we are now, and let's say this was like a 9% growth rate. Now we're at like a 37% growth rate. And you could see kind of what's going to happen in net income and free cash flow. We're seeing that now. The question now is, okay, well, first off, what's going to be the projection of revenue? So that's our, bull, base, and bear case. And then ultimately, what's going to be our projection? What's going to be our projection of the of the net income of the bull case, base case, and bear case? And then my favorite, and this I'm going to put a star here. What's going to be the projection of the free cash flow on the bull case, base case, and bear case? And what we have to do is we have to take all this data that we have in the past, all this data, we have to take all this noise data, and then we have to then take it and extrapolate it into the future, right? So we have to look at it and we have to estimate the future free cash flows, right? We have to estimate the future free cash flows, and we have to discount them back to the present value, and then sum up all of the future free cash flows, and then we divide by all of these shares, the number of shares outstanding, which is 42. That's it. See? It's not that hard. When I say sum, this is sum means the symbol. That's terrible symbol. Which is sigma. Okay, sigma. And if you don't recall, look up, discounted, right? Cash flow. And my discounted cash flow is by far the best in the market. It's very accurate, more accurate than Bloomberg. As you can see, there's your sigma, and it automatically pops. There's your sigma, right? So there's your sigma there. Okay. Oh, sorry. And then ultimately, then you divide by the outstanding shares, and then you get kind of per share the intrinsic value calculation. The intrinsic value, really just the intrinsic value of the stock price. Does that make sense to you? So you can see ultimately what I've been doing, right? And then people say, well, Al, why'd you take, 3-4 years ago when I made a video, why did you take 5% of the revenue? Well, because if you subtract revenue from expenses, you get net income, and or at the end, it gets trickled back into the free cash flow. So what I'm trying to do is I'm like, well, if this represents all the revenue, I'm going to take just this here and say 5% is going to become FCF. But we have to make sure that this will be FCF, which we obviously are seeing that now. Unfortunately, you go to Harvard Business School, they don't teach you this. And with my business school, you walk out rich, and we give you lifetime access to data, right? But ultimately, you talk to people that are invested in an AMC or whatever, you tell them, how many shares this has. They don't know. What's market cap? Market cap, simple. You count up all the, so let's say, for example, Clover, in this example, is trading at $3.50. Market cap is equal to the share price multiplied by the outstanding shares, which we said was 42. So Clover, in this example, is worth, the whole market cap of Clover is worth $147. So if now you know that this whole business is worth $147, but yet it's making $100 million of profit, is this overvalued or undervalued? It's undervalued, right? Because you're making $100 every year, and then soon you'll make $325, $612. You see how it's exponential? Like I told you, it shoots up mathematically like this here. Again, sometimes it's good to, let me go ahead and just bring this back, and let me turn this off. One moment. Hello. Okay. Let me now unplug this. So I hope that you enjoyed the iPad, the iPad talk. Yeah. Let's put this back. Again, high quality education, right? I would say. Let's bring this back up here. All right. So we bring this here. Let's bring the keyboard. Let's bring the mouse. And actually, I need to bring this closer like this. Sorry, I put it wrong. Let's scratch the head a little bit, a little itchy in the head. Okay. So let me go ahead and go to the comments. Okay, we're good. Awesome. Thanks for breaking this down, soaking it all in. Excellent. Right? So that's important, guys, right? Because you have the whole business and you have to understand the whole business, right? So now that we know that, now let's go ahead and apply this to real numbers, okay? This is how, this is why, if you want to invest in the stock market, you need to be able to learn this information. So now let's go ahead and by the way, for people that are interested, if you think this is good, wait until you see what we have. Obviously I'm fully invested in this cause. You can speak to the lifetime members in the chat, but we have a coupon code. It will be expiring soon. SAS, SAAS. It'll give you $1,200 off of lifetime access, one-time payment. It includes access to the stock terminal on the Discord and also the stock terminal on our website, which gives you all this information regarding sentiment, how it's increasing for Clover, how to calculate intrinsic value, as well as get the financial statements. And you can see free cash flow is going to start obviously increasing, and net income is going to be increasing. It gives you enhanced AI analysis as well as the generate insights for this one's more of an added feature, but all this here is included within lifetime access and then some. And again, it's it's by far I believe the best thing that exists online. I'll give you an example. So we have about $45 million of net worth in the platform, and it's probably more now. and that's with a 30% response rate. And that by itself is worth a lot of money, because then people are doing their own due diligence and they're using state-of-the-art data that normally costs thousands of dollars a month that we are paying for, the Al Stock Trades business is paying for, that's included in lifetime access. There's a company that actually has this thing. It's and I'm going to just show you the value here, kind of what this is. So there's something, if I can find it. So there's a platform here, and it's called SumZero, right? And this has a bunch of individuals that do diligence amongst each other, and it has access to people that do due diligence, right? They come in and they work on stocks, and they work together, and they go in and work on stocks and calculate and try to calculate the value. They don't do intrinsic value, but they do PE ratios and whatnot. A lot of their stocks, in my opinion, are not the best. But to give you an example, to get access to this community that I just showed you now cost $7,500 a year. $7,500 a year to get access to this community. The difference is you cannot make video calls with this community. You can't come together. This community does not have data. It does not have access to 2.5 billion outputs of institutionally graded data. It does not have access to any of that, right? And there's no lifetime access. So you have to continue to pay $7,500 a year, right? So the point is this is just a community, and you see how they're charging $7,500 a year. Lifetime access will be $25,000 in the future, right? And if you think that's expensive, that is just 3 years of whatever they're offering, but ours is lifetime at $25K. Right now, it's not $25K. It's actually it's $4K, but if you use the $1,200 coupon code, it brings it down to $2,800. So the point is a lot of people are saying, well, I don't know if this is, in the end, this is going to be an elite group, and there's going to be an initiation fee to get into the group. And on top of the initiation fee, lifetime access after we go to $25K, we'll bring that on for about 4 or 5 years, probably less. After that, it'll go from a $10 to $25K initiation fee, and it'll be around $5,000 to $10,000 a year. It'll no longer be lifetime access, because then the group I've already invested in, and now the group will bear fruits and apples, which you already are starting to see in the triple moat and in the triple dragon section. You're already starting to see that play out with the stocks that you're finding using our software. We have people here, saying some of the best money I have spent. You're seeing the worth. If you don't purchase the platform, it will truly be your bigly loss. The accessibility of this platform now is like buying Clover at 10 cents. 10 cents, not 60 cents, 10 cents. Okay. We're going to get to a point where we will be closing the doors. And if you want to get access to the platform, there will be an initiation fee and a monthly fee, which it will ultimately be around the 7 to 10K a year. Lifetime access will, I believe within the next 5 years, will be soon blocked. We'll be slowly increasing prices. So people that want to get lifetime at 10, 15, 25K, they'll still be able to. But even that will at 25K will turn into an initiation, and then you'll have to pay monthly after that. Okay. Around, I would say monthlies after the 25K initiation, around $833, right? Because why? Because I have invested, and I'm going to invest in the next 5 years. I'm going to invest over 10,000 hours into these members. And these members are going to be elites. You know in Halo, how you have the elites and then you have hunters, the big hunters with armor? These are going to be lifetime members. They're going to have shields, armor, and a blaster. Well, they'll blast through any idiot blogger who never went to business school, right? And writing about stocks and telling their stories, right? You're already starting to do that now. You see the growth that you have now? You understand what I'm saying? Master the chin. You understand? You're starting to realize it now, right? In the next 5 years, you guys are going to be like hunters. And then ultimately, once we have a threshold, there will be a carrying capacity limit where any more members might hurt the disruption phase of being able to work together, where then we will start essentially having a big tight seal where to join, you have to pay a 25K initiation and your monthly dues to get access to this community, which I believe is going to be in the range of a net worth of around $1 billion plus. That's why there's going to be an initiation fee. To get access, it's like basically trying to get on the same chat group with Chamath, right? And we're going to be better than Chamath because we're going to be doing stocks and we'll be analyzing stocks. That is the that's what's exclusive to what we're building, right? That's why this will take me. I'm already in year 4 of building this, and you can see behind me this beautiful stock terminal here behind me. You can see this right here, right? You can see what we're building, right? And now it's all about investing in the members, investing in the lifetime members, utilizing technology to teach you like Arab Indian style, right? With a pen, a whiteboard, and this to take you from zero to hero so you can become a champion and master of the stock market, right? And obviously, I've shown you how I've done things. You see public portfolio, you will see what happens in the next 5 years. You will see how many millions it will be creating, and it'll be amazing, okay? It'll be one. I have a lot of people that are like, man, I wish I invested in Lifetime a year ago, 2 years ago. There's people, you're going to be saying that 10 times over in the next, and we're going to be increasing prices soon in the next 6 months also, right? We're going to slowly, incrementally increase it, right? Because we don't want the wrong people in our group. We don't want to the moon people. We want people that are carrying themselves in a professional manner, right? We want people that want to learn and people that are going to contribute. And because there's going to be a lot of good stocks, especially during recessions. We're going to find a lot of 10 baggers. It's going to be literally, printing, shitting bricks of cash. Okay. So yeah, some of the best monies I spent, Mr. Patel, lifetime since the start of the new year, and the amount of things I have learned in the past 5 months is more than ever. Worth every penny. I can't thank you enough, Al. I appreciate you. That's what happens when you basically go ahead and I'm all in. I'm all in, as you can see, right? I can't afford to invest because I stuck it all in CLOV, not financial advice, right? But then here's the thing. Once you go ahead and do the wheel strategy, which we're going to go ahead and do in the lifetime access with the whiteboard, then we can go ahead and have all this cash. What are we going to do with this cash, right? I invest with confidence now, no more guessing. and following blindly. Absolutely. Absolutely. Okay. So now that we have this, now let's go ahead and maneuver here. So I'm going to give you an example, and we're going to make another video of this, given that this was the UnitedHealthcare video. But I want to just give an example here. Okay. So this was Q1 2024. This is Q1 2025. You could see there was a 33.71% increase. So this was the reality that we calculated. And we're assuming, let's say, that this will be the same percentages on here on out. The more data we get, the better, right? Until when is the SAS code available? So I had Linda, she's my customer service representative. You can email her at support@alstocktrades.com. My email is al@alstocktrades.com. Her name is support. Her email is support@alstocktrades.com. She sets up those coupon codes. I tell her, hey, let's bring this back online and let's set it up for an appropriate time. So it does have a cut time. I don't know. I don't know when. I would say, I think by the end of May. I believe by the end of May. I believe so. So we're, pretty much maybe like less than 2 weeks potentially, right? But yeah, so that's pretty much it there. So yeah, me too. Light the afterburns. Oh, it's gonna be fun with the wheel strategy. Yes. So you could see here the increase, and then what I did was I just projected, Q1, and I calculated the net income. So what I ended up doing is I projected, now Q2 of 2024 to Q2 here, and I projected the net income for Clover for this year, and I got around where the hell is it? I got around EPS of 10 pennies, which is around $50 million. $50 million of net income this year. Now, what's interesting here, ladies and gentlemen, what's interesting here is what do you call it? What I did is I projected Q2. So, okay, watch this. So Q2 2024, they had $7 million of profitability. Yes, they were profitable last year. Yes, they were. Let me show you. Quarterly here. Net income. Q2, they were profitable $7.4 million. So they were profitable, but guess what? I projected it to Q2 2025. Obviously, I removed some of the things, but I projected it to Q2 2025. And then I got 37 million. So you could see now, you see how like we did with Clover, the revenue goes up 33%, but then the net income went up by like almost 4x, right? 4x it went up. And again, we don't know if this will be the case. We'll see what happens with Q2, but I'm assuming Q2 will be positive, right? So then what I did is I projected then now the Q2 for 2026, and then I got 77 million, and this is without the increase. $77 million, right? So it's going like, so last year was 7 million. This year we're anticipating 30 million plus. Next year, Q2, this is one quarter, and this is without SAS. 1 quarter without SAS. And so again, let me start over. Last year, 7 million. This year, projection 30 million plus in 1 quarter. For next year's quarter, we're projecting 77 million. And the quarter after that, we're projecting 134 million. That's just 1 quarter. Okay? So you can see these net incomes are increasing a lot, which goes back to that diagram I showed you in the graph, which we're going to go ahead and do that over again because repetition is the mother of learning. Okay? So that's what we're going to end up going over on the next video. We're going to basically do these calculations, but we're going to do them for all of the quarters and even go up to 2028. And we're going to ultimately see what is going to be the profitability. Now, why is this important? Because then we'll be able to calculate the free cash flow. And we're going to start to see that the free cash flow in the next 2-3 years is going to go to $300, $400, $500 million of free cash flow. Right? So give you an example. Let's say in 2027, we have 134 million in Q2. And let's say Q2 is historically big. So we could be a little humble. We'll just do the example. 132 million. But let's say we'll take half of 132, which is 66, right? Which I think we're undervaluing Clover. But let's say in 2027, this was Q2. And let's say Q1, 3, and 4 is going to be 66 times 3, 66 a quarter. That's 198. And then now you take 198 plus 132. That's 330. Ladies and gentlemen, this does not include SaaS. And this, I'm freaking halving the net income, which I think is bullshit. I think it's going to be more. Then let's go back to what Clover was on the operational cash flow for 2024. It was 80. Subtract unpaid claims, right? So we do 80 minus 19 is 61. But they were negative net income of 43. So you add 43 million. You get 104. Then you add it to the 330. And we should have a cash flow of 434. Then you go to Al Stock Trades. You go in and open up the price target software. And then you open up our proprietary terminal. You enter CLOV, but this time you enter free cash flow of 434. 434. And you say, we won't say 37%. We'll grow them at 23%. This is like in 2-3 years, let's say. We calculate the value, and we get a bull case of $49.96, a base case of $34.72, and a bear case of $25. And imagine if they do continue to grow 37%, then you start seeing a bull case of $132, a base case of $89, and a bear case of $63, right? And so you can basically see the power of the terminal. Now, if you think, Al, I don't believe that free cash flow can go up that high, let me give you an example and let me zoom in. Again, this is a proprietary terminal. This is with Palantir. Look at Palantir's free cash flow. It went from negative 300, then 321, 183, 697 million, 1.141 billion. You see that increase? Are you seeing that increase? You do the enhanced AI analysis and you look at the free cash flow increase. The free cash flow is going up by 279%. Even though, and you can see the free cash flow is going up more than the net income, right? Like I told you on that diagram. You see how I was able to simplify that diagram into all this mathematical jargon, right? Because I've done this many times, right? I've created the equation and made it better. Okay. So you see what this is? It's impressive, right? And ultimately that's why, and this is without SaaS. Holy shit. I'm telling you. And now, before I go to the comments, let me go ahead and open up, Miss Bertha.
Michael Corleone reluctantly let himself get dragged back into family. Empire, Godfather 3. 4 CEOs who transformed their companies, like Einstein UNH chairman Stephen Hensley, the urge to right the ship when it's crisis. Strong.
You see, she's commenting on what I'm saying. This guy's like the Godfather. He knows how to steer the ship, and he's taking back the helm for United. So this might be a good reversal for them. Again, I've messaged Bertha. I'm going to message her again. I started following you. I follow nobody. But I decided to follow you today. I would like you and I to have a discussion Clover Health. You and I both know what's coming.
At Bertha Coombs, I started following you. I followed nobody, but I decided to follow you today. I would like you and I to have a discussion about Clover Health on CLOV, and I both know what's coming.
I would like you and I to have a discussion about Clover Health. You and I both know what's coming. All right. There's that. All right. So now let's go ahead and go to market cap. You don't want to talk to Bertha anymore? You tired of her? Just letting. Oh, you don't want to talk? Let's see here.
Can make more money safely if you're plugged in the terminal? You will have a better chance at surviving out there. Just learning the options trade returned 8 times in my lifetime.
Yeah, there it is. Yeah. So Master the Chin, lifetime member, can make more money safely if you're plugged into the terminal. You will have a better chance at surviving out there. Just learning the options trade returned 8x my lifetime. Exactly. We're just printing cash. Shout out to my friend Market Cap. He posted this. I love this. I love this very much. He said, in 10 years, guys, it's happening. I strongly believe that it is possible for Clover to have made the biggest positive impact in healthcare while simultaneously accruing the largest market value in healthcare in excess of any healthcare company that exists today. If this is the case, then we may see Clover at potentially, who knows? Like, imagine if they become another behemoth. We could see a $350 stock price. Ladies and gentlemen, the net worth. Let me include both of the whole share count here. Let's do this. Oh, that's not right. Let's do this.
144,200,000.
Well, I will literally have more than $144 million. $144 million, ladies and gentlemen. Okay? And imagine all the other lifetime members. We have people that have 900,000 shares, 3 million shares, 250,000 shares, 300,000 shares, 8,000 shares. We have so many people that have, different amounts of shares. 50 shares, right? We got someone who has 50 shares. They're just sampling. I think they're like in high school or something. That's pretty impressive, right? But the point is we have so many people that are going to be it's going to be multi-millionaires, but altogether coming together, we are going to be at a $1 billion level. Exactly. And that's if I stop buying now. I am buying, right? So let me go ahead and let me get to this right now. Switching from car to electric bike. You're so funny. Here, Amit, should I buy more Clove or SAS? Again, so I'm not a financial advisor. I cannot tell you what to do with your money. But what I can tell you is I do have the power to tell you what to do with my program. And I would say, don't buy my program. I'm not a financial advisor, right? Don't buy my program, okay? Right? But ultimately understand that it will go up in value, right? But I do believe, so I'm saying don't buy it, right? So, again, what we're doing is quite different than other folks, which unfortunately people, I don't want to say their names because I don't want to get sued for a defamation lawsuit, right? But other people have kind of spoiled the mouths of YouTube Finance, and they took a shit on YouTube Finance. And unfortunately, there's been a lot of distrust. And it's unfortunate because once you actually have something that really, truly exists, and many people are telling you that this is the real deal, if you want to become a millionaire, if you want to make $100,000, $200,000, $2-3 million per month, This is the platform, right? And I stand by this platform 120%, right? I put my reputation on this platform because I know it worked, because it took me from homelessness to becoming a multimillionaire, right? I'm getting inflows of capital, investing it in Hood, in either Hood or Clove. Hood's amazing too. They're about to go to Canada, right? 11,000 this month. Feel like only being able to buy 1,000 means I have no money, right? No, seriously. we've been going hard. We've been going hard on on this dip here, right? Yeah. All right. So there is that. So what we're going to do now is we're going to conclude the live. Shout out to 378 people watching from Twitter. Shout out to 88 watching from YouTube. We have about 466 people watching right now. That is impressive. There it is. Investing in yourself is pretty hard to calculate the future return. There's endless possibilities. And that's Warren Buffett too. Warren Buffett said the best investment you can make is an investment within yourself. And the first thing I did, it took me 14 years to learn this information. And we have people that are coming in lifetime access and they're able to calculate intrinsic value within day one. Isn't that amazing? Literally, I turned Wall Street upside its head, right? Because I have the data that you have, guys. I have the same data. So come at me, right? Come at me. This is fun. All right. As always, hit the like button. So JH, we do. So you bring up a good point. So if we go ahead and open up the tab here and we go to our stock trades. Oh, by the way, we also are going to have, it's actually going to be quite, it's going to be quite interesting. We're also going to build a community section on our website now. So all the triple moats and all of the triple dragons, we are going to move them in the Our Stock Trades website where people can, it'll look like you'll have, it's like your own Twitter feed where you can basically put the stocks and write your thesis and people can comment under them and people can search through those stocks better than Discord, right? So again, there's a lot of great things planned for this platform. You're going to understand why this thing's going to be worth $25K initiation fee and about $10,000 a year, right? You're going to start to realize why, you know, what you've stumbled upon, okay? So let me say this. If you go to, let's say, mastering or bundle, again, this is just Discord, and it includes the stock terminal of the Discord, which is around 2.5 billion outputs. This includes the advanced stock terminal. This is the normal stock terminal. This is the advanced. This is the advanced right here, right? This is the advanced right here, right? So yeah, you click on this. Let's click on this here, and then you go in and you make your one-time purchase. And what you do is you can do a couple things. My recommendation, we've had like at least 5 people yesterday do this, and I'm please don't do this because it's just a lot of work on me. Please make sure you put the coupon code and take your $1,200 off, right? You get $1,200 off. This will be your lifetime, for God's sakes. And then to make your monthly installments, you can either do PayPal or Affirm. You do Affirm, you can learn more from Affirm. Thank you to our partners at Affirm. We appreciate you. You could go ahead and do 36 months, and it'll be $96 every month for 36 months. Right? It's pretty good, right? And then also we want to thank Affirm for increasing the limit because now we could I think we got to 30,000. I don't think we get 35,000, right? $30,000. So Affirm increased our limit now to 30K, which is eventually where the terminal is going to end up being for lifetime access. And then we're going to remove that. It's going to be an initiation fee, and then it's going to ultimately be a yearly subscription. But as you can see, you could pay around less than $100 a month for just 36 months. And then That's it. You stop paying. And you get lifetime the day you purchase with a firm. Isn't that amazing? Oh, you have James here. I paid lifetime out of 6 months of firm, no interest. Yeah. So if you decide to do a firm for 6 months in payments, you pay 0% interest off of the 6 months. I mean, it's a freaking no-brainer, right? Again, given that this is the only investment you can make that will return money in your pocket. This is the only investment you can make that will give you money, right? Go find me something that teaches you how to make money, right? It does not exist, right? So there's that. I need to take a look at it right now. I need to take a look at it because if that would have happened, they would have dropped yesterday. Not today, but we'll see. I mean, they did probably have to revise potentially, so it'd probably be good to do a deep dive on that, right? But yeah, so there it is, guys. We're gonna go ahead in the next video, look at the 2026 projections. We're gonna go ahead and kind of walk through those. We're gonna calculate them, and we're gonna calculate the net incomes of 2026, 2027, and 2028, right? And then we're going to estimate the future free cash flow of all of these things, and we'll calculate the intrinsic value, and we can essentially see where could we go, right? Teaching us to fish, not just feeding us. Exactly. That's the whole point. So ultimately, you can feed your children. And then guess what? For all the people that don't know, lifetime members, especially the ones that are in our beta access program, the ones that believe in us now, you can pass the licensed software to your children, right? Because this is a generational wealth. When I say lifetime access, it's not just for your lifetime, it's for your children. And we have a license agreement for that we can go ahead and transfer it to, right? So a 40-year-old coworker of mine laughed in my face when I told her I had plans to retire at 40. She asked how. I told her the market. I've been trying to encourage people. Man, Doug, let me tell you something, Doug. I have some people that are worth a lot of money, and a lot of them are in real estate, and you know what they say? They're like, the stock market's gambling. Even if people have money and wealthy, they can be stupid when it comes to the stock market. Because like I explained to you and showed you the box with the 42 shares of how revenue minus expenses has net income, which flows to the business and flows to the ownership. I have medical students that are so smart. They tell me, I don't believe in the stock market. I don't believe how I can put money into something and make more money out of it. I'm like, you don't believe in owning Walmart, a piece of ownership? Because it doesn't work like that. The stocks just go up. I'm like, what the hell is this guy talking about? Right? Again, there's a lot of stupid people out there. Okay. Once he realizes that CMS is going to drop his pay year over year, and he's going to realize that administrators are making all the money, and then now the government's going to blame doctors for this increase, so they're going to drop him as well. Then he's going to maybe realize that potentially he may have to bow down to the stock market and bend the knee and learn how the wealthy work money. And that's what I'm trying to teach you, right? What about Peter's meeting tomorrow? Do we think we'll see tomorrow? We'll check it out. I made 66 this year on PLTR Hood and Clove. And then, oh my God, Clove is doing moonshots, right? Beautiful, right? And 28, right? So I'm so excited for the future, guys. You have no idea. This is gonna be a family, right? I'm gonna be getting the property on the beach. You can see a beautiful beach view, and we're gonna do my little camera dance, right? And then the little thing here, and then we're gonna have this beautiful view. We're gonna have the iPad. And we're going to be talking stocks when there's a recession. We're going to say, lifetime members, assemble. Let's go ahead. You are an expert in the oil sector. You're an expert in the technology sector. You're an expert in X, Y, and Z sector. Go find me and analyze all the stocks of X, Y, and Z. Go ahead and go through Value Investors database. Go comb through all those stocks. You got about 500 of them. Go comb through all the stocks here and essentially come back to me. And then we'll have our summit or whatever, and we're going to go and talk about our highest conviction plays. And then we're going to be able to find asymmetrical moments where the VIX and volatility index is over 50, right? Bear AI, dumb individual investors are bearish. at the highest level, we're going to take and seize those opportunities. And that's how we're going to do it. But it starts with community, but not just any community, because you can have a community of dumbasses. Just look at what, look at some Reddits, like in regards to the, short squeeze crowd, sadly, with a movie theater company, right? You can have you can have a group. It can be dumb, right? But you also have a group, infuse them with knowledge, infuse them with data and guidance and leadership. And, ultimately that's how you create a $1 billion enterprise in terms of having people that have, 5 million here, 10 million here, 100 million there. You come together. We already have $45 million. We already have 45 million of net worth, and that's only a 30% response rate on the survey, right? So it's definitely more than 45 million, but we'll stick with 45 million now, right? We already have 45 million. We're already 5% there, right? And the stock is at Google's 2017 levels. Come on, right? All right, guys. Love you all. I can't wait as well. Appreciate you all, and I'll see you on the next one.